Are you currently eligible to collect Social Security, or will you be in the near future? If so, then you should keep watching this video, as I'll cover my 7 most frequently questions that I get asked from people that are soon to be eligible to collect Social Security. Welcome back. This is episode 178. In this week's episode, I'm addressing my 7 most frequently asked Social Security questions that I receive from both clients and from listeners of the show. And if you are yet to collect Social Security, then you'll want to keep listening to this episode, as I'll cover what those tips and tricks are that you'll want to know before you begin collecting. Planning for retirement is complicated, and I do my best each week to give you tips and tricks on how to best do this. However, some of you need more help beyond what I can offer in this podcast and in these videos. And one way to do that is to reach out to me directly for help, and you can find out more by going to retirewithryan.com and clicking on free assessment to see if we're the right fit for each other. However, if you're not the right fit for me, or if you're not yet ready to reach out to me, or more of a do-it-yourself type person, then you could consider signing up for my comprehensive retirement planning class, Retirement Readiness Review. It's an online course where you can go through at your own pace the steps that are necessary in planning the ideal retirement. You have lifetime access to the material, as well as I provide you with a number of helpful checklists for making sure that you take care of the things that are most important when you're planning your retirement. This course normally retails for $297 plus tax, which I've been told from many people is a steal. However, as a special gift for being a listener of this podcast, a watcher of this video, I'm offering 40% off the cost between now and the end of the year. So if you use the code RETIRE40 when you check out, you can receive that 40% discount. So head over to retirewithryan.com and click on Courses, Retirement Readiness on Demand to sign up. And you'll need to act fast, as this is a discount that expires at midnight on December 31st of this year. So let's get back to what are the 7 most frequently asked questions I get from people who are considering collecting Social Security. So the first question is, when am I eligible to collect benefits? And that depends. There's really 4 ways that you can collect Social Security benefits. The first being Social Security disability. If you qualify for Social Security disability, you're eligible to receive your full Social Security retirement benefit earlier than the normal retirement age. And you'd obviously have to qualify for Social Security disability. There are a number of procedures to go through. And then it can take up to 18 months to collect your Social Security. So if you're in a situation where you qualify, that's one way you could get access to your Social Security. If you don't qualify for Social Security, then there are 3 other ways, or 3 other points that you could be collecting Social Security at. One is full retirement. And that's where you receive your full Social Security retirement benefit. And that age is between 66 and 67 for everyone not yet collecting. For everyone born in 1960 or later, that age is set at 67. For those born between 1954 and 1959, that age changes slightly with each year. For example, if you're born in 1954, that age is 66 months. If you're born in 1955, it goes up to 66 and 2 months for full retirement. Then in 1956, it's 66 and 4 months. 1957, 66 and 6 months. 1958, 66 and 8 months, and then 1959, 66 and 10 months. Now, you can collect your benefit before that point, and you can collect your benefit as early as age 62. However, you will get a reduction in your benefit, and your benefit is reduced by roughly 0.5% per month for every month that you collect your benefit between 62 and your full retirement age. And if you collect beginning right at age 62, depending on the year that you were born, you'll receive between 70 and 75% of your full retirement benefit. You also don't have to wait until these points to collect. You could collect any month you want between 62 and your full retirement. You also have one other thing that you can do, and you can delay collecting your benefits past your full retirement age all the way up until age 70. And by doing this, if you wait a full year, you're receiving an 8% increase for each full year that you wait to collect your benefit. So if your full retirement was age 67 and you waited all the way until 70 to collect, you get 8% per year for waiting, which means you get a 24% increase in your benefit. And that's on top of any cost of living adjustments that you could also be eligible for. And those cost of living adjustments are announced towards the end of each year. And since they've the current system that has them, the way they're calculated, they've averaged about a 2.8% increase. So question number 2, how much will I earn from Social Security? Well, that depends. That depends on when you collect your benefit, as we just discussed, but also the amount of money that you've earned over your career. So Social Security has a formula that takes into account your highest 35 years of work history. So if you have less than 35 years of work history, then a 0 is included in the calculation. So if you've been out of the workforce for a while, or maybe you started working at a later point in life, then if you work longer, you could replace some of those years with zeros with higher earning years, where you could help boost your formula. Also, if your salary changed a lot later in your career, if you work longer, that can also replace some of your lower earning years with higher earning years, which could then increase your benefits. And again, there are cost of living adjustments that can also be factored into that as well. And that's what Social Security is doing. I don't want to bore you with the formula, but they're taking those cost of living adjustments into account to then get to what's known as your current retirement benefit, or your full retirement benefit. And that's what you're eligible for when you look at your statement. So definitely something everyone should do is take a look at your statement if you haven't done that before, to see what you're eligible for at these different points. And also look at what Social Security has down for your different years of earnings to make sure that's correct. And generally, once you start collecting your Social Security benefit, there is no going back. That's what you're going to be getting for the remainder of your life. However, there's a one-time Social Security do-over, as it's known. And if you apply to redo your benefits within 12 months of receiving them, and you fill out this form within 12 months of receiving your benefits, SSA.521, and then you also repay all of the benefits you received during that 12-month period, including any spousal or child benefits, you could then restart the clock and then be able to wait down the road to redo your benefits. So why might you do that? Let's say you thought it was the best thing to collect as soon as possible, and then you realized it wasn't, and maybe you went back to work. You can repay what you've received, follow the procedure with this, and then be able to wait later in life and get a higher Social Security benefit. It's estimated that about half of the people who are currently receiving Social Security benefits as of a few years ago actually decided to collect their benefits early. So a lot of people do collect their benefits early, and they may not know all the information that I'm going to give to you in this episode, which is important to factor in your decision-making process. So the third question I get a lot is, what are spousal benefits and how do they work? Well, with the spousal benefit, you're eligible to collect at least half of your spouse's benefit, provided your benefit is less than half of theirs. So for example, let's just say one spouse is eligible for a benefit of $3,000 a month, but the other spouse is only eligible for $600 a month. Well, that would then allow the other spouse to receive half of the higher earning spouse's benefit, so they would then be eligible to get a full $1,500 a month. However, there are a couple rules to make this happen. The first is that the spouse that you're collecting off of has to have started collecting their benefits. So in my example earlier of how someone could wait until 70, let's say one spouse was waiting until 70, then the other spouse would not be able to start getting that full 50% benefit until that spouse started collecting at 70. Additionally, for you to get the full 50% of your spouse's benefit, your benefit, you have to have reached your full retirement age when you file to collect your benefits. So if you start collecting your benefits early, you're not going to get the full 50% of your benefits. Question number 4, what are divorced spousal benefits? So if you're currently divorced, you may be wondering, am I eligible for a benefit off of my ex-spouse? And you may very well be. These work very similar to collecting a benefit from a spouse. So just like that 50%, if your benefit's less than half of your spouse's benefit, you're eligible to collect half of your ex-spouse's benefit. There are some rules with this as well. You have to have been married at least 10 years. And once you get remarried, you're eligible now for benefits off of your new spouse. So if you've remarried, you'd be eligible for benefits off of your new spouse. And however, anything your ex-spouse does, as far as if your ex-spouse remarries, or if they were married multiple times, that doesn't impact your benefit at all. So don't be worried about that. If you are eligible for a divorced spousal benefit, best thing to do is reach out to Social Security and find out a little bit more information about that. So question number 5, this is a big one. Can I work and collect Social Security? Well, that also depends on when you collect. So as we discussed, you're eligible to start collecting your benefits as early as age 62. However, there is a limitation if you collect your benefits at 62 and you have other earned income for that year. So every year, Social Security has a number that they put out, and if you earn over that number for that year, your benefit is then reduced $1 for every $2 that you make over that limit. So for example, that number for 2024 is $22,320 or $1,860 a month. So if you were thinking, all right, I'm going to collect my benefit at 62 and I'm making $50,000 a year, I'm going to get $1,800 from Social Security, let's just say, well, you're over the limit of $22,320. So your benefit is actually going to be reduced and you might not get any of your benefit. So that's one of the reasons why if you're considering collecting early, you need to be aware that there's a limit to how much money you can earn. And that number only goes up a little bit. For example, last year in 2023, that number was only $21,240. So that works from your age 62 all the way until the year that you're going to reach full retirement. So let's just say full retirement for you was in July. So starting in that year where you're going to reach 67, you actually have another number. You can earn up to another number the IRS sets, and if you earn over that limit, your benefit is reduced $1 for every $3 that you earn over that. So that number for 2024 is $59,520 or $4,960 per month. So there's a lot more income that you can make in that year. So if you're going to keep working in that year and collecting Social Security, that is another number that you have to keep in mind. But starting in the month you reach full retirement, there is no earnings limit. So starting in that month, you could work, make your full salary if you were over the limit, collect your full Social Security benefit without any reduction. So if you're planning to do these, you might want to wait until that point to collect if you're going to be over the limit. Now, what happens if you do collect your benefit early and you're working and earning this money? You don't lose the benefit. You get it later in life, either when you reach full retirement or when you stop working before you reach full retirement. Now, there is a special exemption because you might be thinking, what if I work half the year? My birthday's in July. I'm planning to work half the year, then retire, start collecting Social Security. I'm going to earn over that $4,960 per month. What do I do? Well, Social Security has a special exemption where they waive that limit only for the year that you retire for that year. If you're still going to keep working or go into another job and you're going to earn over that limit and you're not yet reached full retirement, then they're not going to waive that. So question number 6, is Social Security taxable? The quick answer is yes for most people. And again, that depends. Up to 85% of your Social Security benefit can be taxed, but luckily it's not taxed at 85%. It is based on your total earned income for the year plus part of your Social Security benefit. So there's a formula that Social Security has, and what it does is it takes into account half of your Social Security income for that year. If you're marrying, filing jointly, you take both of the spouses' Social Security for that year, take half. You add that to your other adjusted gross income for the year, plus any non-taxable interest, meaning if you get interest from any tax-free bonds, you'd have to add that back to your adjusted gross income because normally that doesn't count as part of it. So what is earned income? W-2 income, IRA distributions, pensions, dividends, interest. These are all things that are considered earned income. So you take half of the Social Security and add it to that number plus non-taxable interest. If you're single and this number is below $25,000 when you go through that formula, then you pay zero tax on your Social Security income. So that's one way you could not pay tax on your Social Security. You have to have very low income for that year. If this number is then over $25,000 but less than $34,000, 50% of your Social Security counts as taxable income. So half of your Social Security benefit would count as income for that year. If then this number is over $34,000, then 85% of your Social Security counts as taxable income. So if you're married filing jointly, then this number in this going through this formula was below $32,000, you pay zero tax on your Social Security income. If this number is over $32,000 but less than $44,000, then you pay 50% of your Social Security, or 50% of your Social Security counts as taxable income. If this number is over $44,000, then up to 85% counts as taxable income. So it's possible for a lot of people Social Security is going to be taxable. The only thing you could really do is just delay collecting Social Security as long as possible. Take more out of your retirement accounts. That might lessen what you then needed from your retirement accounts later in life. And it's possible that that formula might produce a lower number that might reduce the amount of your Social Security benefit that's taxable. So as always, it's probably a good idea to make sure that you're having federal income tax withheld from your Social Security benefits, because if you don't and it's taxable, you're going to find out that you might end up owing penalties, or in the following year or years, you might have to pay quarterly estimated tax payments, and that's not a lot of fun. So make sure you fill out the Social Security form to have taxes withheld from your Social Security benefit. And my last question that I get a lot is, how do I apply for benefits? How do I start the process? So for most people, you can apply right online. Social Security's website is ssa.gov. From there, you can create an account if you haven't done one already. And from there, you can log in, and then you can go through the process of applying for benefits. If you don't have an account yet, it's always a good idea to create one. As I mentioned earlier, it's a good idea to look at your statements. If you want to look at your statements online, you can create an account, you can log in, and then you can also use some of the other helpful calculators that Social Security has if you're looking at different options. If you can't apply online, in certain situations, you might need to call Social Security. Just be prepared sometimes for a long hold time, or you might want to schedule an in-person appointment at a local office. And you can apply up to 4 months in advance of when you want your benefits to start. So keep that in mind. If you have a certain point you want them to start, apply in advance, but just keep in mind when you get for that first payment you receive, it's always delayed 1 month. So you're not going to get that in the month that you want it to. If you want it to start in July, it will come in August. That's just how Social Security does it. So I hope this was helpful on learning more about Social Security. Consider checking out some of my other podcasts as well as other videos if you want to learn more, or even better, sign up for my on-demand retirement planning course by going to retirewithryan.com so that you can get even more information about Social Security as well as many other important retirement planning topics. As always, if you have questions, you can go to retirewithryan.com and click on Ask a Question to have them considered for a future episode. Have a great week, and I look forward to talking with you next Wednesday. Take care.